Manish, I would love to understand how you look at the global and local macro, if I can kickstart that conversation, because it seems that it's impacted as it is by a variety of factors at every single point of time. Just that the spate of the overhang of geopolitics on global macro now seems to be an unending one.
Yes, Neeraj, your question is absolutely right. It is something that's been playing out for a few years now, that the regime change in the world from the very West dominated, kind of architecture which was made is changing. And in that period, it's very normal to see these kind of tumultuous events because it's like a kind of a power fight going on between the two ends of the world, with the US and its allies on one side and Russia, China, Saudi, Iran, and the others on the other side. And therefore, this architecture, until it's kind of reframed, I think we're going to just see more of the same. And one should actually be a little more defensive in the context of what to expect from the world, rather than assume everything is going to be as it was in the what I call the golden era of capitalism, which lasted all the way from breaking of Berlin Wall in 1989, pretty much till 2020.
Okay, so Manish, how do you think about this? Because it's almost impossible to predict how long can such a change, if you will, or the process of change really last, and because India has shown its hand to be a neutral body in this, how does an Indian investor, whether investing in India or like you probably investing in India and overseas as well, approach something like this? What's the thought process?
No, look, the Indian macro and the Indian positioning in the geopolitical world has never been any better. And that's playing out very well. I think the regime did remarkably well when this Russia crisis broke out to stand our ground and say that, we can't afford to get ourselves knocked out by having spiraling oil prices. The way the last time we got stuck when they put sanctions on Iran and we complied and China did not. And China benefited from that. So I think that learning has been great. I also think it's time where we will have to grow up and act a bit more like, we're already the fourth largest economy. We're going to be the third largest economy, but we're still kind of trapped in some paradigms of the past, which even we will need to step up and change. As a small example, the RBI has already been trying to internationalize the currency. And small amounts of UPI payments are happening across, whether it's the Middle East or Singapore. I believe they were also trying it out in France during the Olympics and so on. But the crux of the matter is that we are holding $675 billion of reserves, which is more than 15%, 16% of our GDP. And to have that kind of money locked up, really not making us returns other than that 1-2 lakh rupee dividend which goes to the government, is a travesty. And we also complain about liquidity being tight in India, and this kind of slippage going out to international markets from India is just not on, given the acceleration in growth that we need. So some of these changes as they occur, I think it sets the stage for faster growth in India. Depends how and when they play this out, but it's something which is inevitable. The rupee is going to be a lot stronger than people have been used to in the last 20 years. I think rates in India should be significantly lower compared to what they have been in the past. If one looks across the world and just removes the labels from the US and UK, for example, they're running 5% type fiscal deficits. They're running 3% upwards current account deficits. And there's no way these currencies are going to stay as strong as they are. And if we don't act, we're going to end up importing inflation because it's going to come to us via imported commodity prices. And there is going to be an upsurge also in hard assets, precious metals like gold, silver, uranium, and so on. So that's really the backdrop in which one has to operate in this kind of market environment. While at one level we are very sanguine about India will continue growing at whatever it's 7% type GDP, our valuations are not now leaving a lot of room for comfort, despite all the rosy, clear blue skies that seem to be ahead of us. And I'll just paraphrase what Warren Buffett used to say, that you pay a very, very high price for a cheery consensus. And currently we do have that cheery consensus around India.